Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Yesterday's sell-off came out of nowhere as there was no fundamental event that happened to trigger the markets. But in last evening's video, the very first coverage that I talked about in the S&P was that we closed above the RXT number. Those of you that are familiar with the market grid know that we had a short-term sell signal for 2 to 3 days. Last night I was talking about an R1 S2 low. Well, what happened is once the markets opened lower, Apple started to decline, and then the algorithms kicked in and everybody was on board and the market liquidated substantially. Let's talk just a minute about what actually happened yesterday. It all started on Monday, and I've been talking to you folks about that the split on Apple and Tesla was not a bullish event. In fact, you saw the largest capitalized company on the planet basically quadrupled the amount of shares on the street. All of a sudden, you get a little panic and you get a 10% decline in the stock, and it's probably not over yet. I actually did a special video last night on shorting Apple, but unfortunately it came in so weak it was pretty tough trade. There was an opportunity, but it did not meet the criteria that I'd hoped that we would see. But once that started to crack, we saw the algorithms, we saw everybody starting to panic, liquidating in Tesla, Apple, and the S&P. Now, all three of those markets triggered an RXT sell yesterday. I discussed those in the live stream that I did on Wednesday, and then I discussed the RXT signal in the S&P last night. So we knew that markets were going to be selling off for 2 or 3 days, just didn't know that there was going to be any type of major decline like this. Now, many people on the internet seem to think that I have a crystal ball, and I do. The problem with this damn thing, it doesn't work. No one knows when a high comes in. No one can predict a day like we had yesterday. What you get to do in the markets is one thing, is you get to watch the activity and make a decision on what it means for the next several days or several weeks, or determine whether or not it was a significant event. And that's what I will do in tonight's video. We look at the fundamental releases that came out yesterday. We had unemployment claims that came in at around 836,000, slightly below where they were expected. The continuing claims, which I've been telling you to watch, came in at 13.24, and that was a bullish number. So the fundamentals that came out yesterday were actually supportive of the markets and the continuing unfolding of the economy coming back online. Once Apple started to decline to a certain point, we saw a stampede in Apple, and it led the way down for the balance of the session. Because of yesterday's sharp decline, has kicked up volatility, and we're likely to see a continuation of this for at least 5 to 8 sessions going through next week and into the following week before any stability is likely to come in. So we're going to see expanded trading ranges every day. It's not going to be like we've seen in the past where we get 18, 25 handle moves. We're likely to go back into 40 to 70 handles. If it does stabilize over the next few days, that'll be a positive. That would tell us a lot more about the markets and what they're likely to do going forward. It's way too early to make any major calls here on calling a top, but I will tell you, and I'll go through details here in the technical section, we did get a short-term signal for the S&P to go into a neutral mode on yesterday's open. We did get a sell signal on the trade that I talked about for the last several months. It came in on May 5th at 28.44. That trade is history. We're now neutral to down on the S&P, and that's going to be within this context I just laid out, somewhere between 5 and 8 sessions. Now, the real question is, how deep will this correction be, and where will the support numbers be? And I will unpack that in the technical section tonight. So as we come into Friday, we've got some major news yet to digest for the end of the week, which is the unemployment numbers. Expected to show about 1 million to 1.2 million new jobs created, and the unemployment rate to drop down to 9.9 to 9.8%. Now, those numbers are likely to come in line, but if they miss, I've talked a lot about this over the last week, that it's possible that we could see some action by the Fed over the weekend. I suspect that a lot of folks will be a bit nervous as we come into the close tomorrow. We have a long weekend ahead of us, so bring in some dynamics into the market action tomorrow. It could exaggerate the volatility that we're likely to see in Friday's session. Also, because of the sharp sell-off yesterday, we saw a massive liquidation in our short-term database, and I've been discussing that over the past couple weeks that I expected to see a huge liquidation in the short-term models. I didn't think it would represent a substantial decline, and now appears that this may be bigger than what we expected, but it will be somewhat muted as the intermediate trends are still very positive. I'll go through all those details here in just a minute as we go through the WaveTech database. Just like I did yesterday when the market was collapsing, I did a live stream. If that type of action is unfolding again on Friday, I will definitely light up the screen somewhere between around 1 to 1:30 New York time is when I'll come up. I'll want enough of the session to unfold before I come live. So let's take a look at the charts, see what they're telling us for Friday and the end of the week as we go into a long holiday weekend. Beginning with the review of the WaveTech database, one of the things I've been talking to you about over the past several weeks is that I expected to see a big liquidation in the short-term database. Well, that's exactly what happened. 5,428 sell signals, 195 buys between the two models, a net sell of 52.33. It dropped the database from around 58% bullish down to 40.35, and I don't think we're done with this thing just yet. As I've been talking about, I was hoping we'd get a complete blowout of the database and that it would move down into potentially around 28%. And this will be a great indicator, and I've talked about this, will be a very healthy thing for the market to happen. Now, the fact that we were down 3.5% yesterday had a lot to do with what happened with Apple, and a lot of emotion came back into the markets yesterday. Even though, generally speaking, fundamentals, there was no real news that came out, but we saw a substantial amount of selling. And I just want to caution you, for those that are using WaveTech, be really careful. I just took a skim through about 25 or 30 of the symbols that are actually showing as a buy. Most of them are not good stocks. There might be a couple jewels in there, but I'd be very careful as we go through this cycle, and I'll go through all the details in the technical section here in a few minutes on what's going on. There's just going to be a ton of volatility. It's going to become a much more difficult market on a short-term basis. Now, I've talked about this as well, that I believe that the easy money has been made. It's going to get a lot harder from here. I do expect to see the liquidation occur in the database and ultimately moving down into the 30, maybe in the 20% range on the bullish factor on the short-term basis. And I've been talking about this probably 3 weeks now, that once this starts, it'll take 4 to 6 weeks to get the patterns to set up and be ready for another round of buying. And I suspect the next round won't be nearly as robust as the rounds that we've seen in previous events. If you've been watching the channel for a while, you'll know that the short-term database got up to 90%, it dropped to 65, went back to 90, now it's at 40. So we're finally seeing that blowout of the short-term database. I originally discussed that I didn't believe that this liquidation in a database would be a major decline. Now, it does have an impact. I'll go through the technicals here in a minute. With a market that is up as much as we've seen, there's going to be a high-level consolidation. Been talking about that as well. And the database is reflecting that reality. Now, today is Friday, and after the close, the weekly models or the intermediate models will actually update. We're likely to see some moderate liquidation. It's currently at 69.84. It may back up maybe 4 or 5% off of its current levels, but the intermediate patterns, they will start to consolidate, and there'll be some really positive rotation. I'll talk about that on Monday night when I do the video, because we are at a long weekend. Beginning with the S&P cash, I discussed this in the opening comments that the trade that we had on over here on May the 4th has finally been exited, and there was a sell signal off the open this morning, so we do have a liquidation and no current position. Now I'm going to go through a lot of detail on what I expect to happen on the S&P. Today's going to be a very significant day. After a big decline like that, the follow through will be important. We are seeing some weakness overnight. Futures are down around 15 handles right now on the S&P, trading down into support levels, and I'll go through the futures here in a minute. On the cash markets, the critical level will be the 21 period moving average. It has lost a lot of momentum. We're in the 0.4 plus on across the board on PPM 1 and 2. This decline has rolled these indicators over. You can see that PPM 1 has broken through its first, second derivatives. So has PPM 2. So this puts us into a sideways mode, and we're going to set up a broad trading range here. Because of the massive move that we've seen since July, we're going to see a broader trading range, and it should remain within some of the context of the moving average. So 34.21 is going to be a very critical level today. That is the 21 period moving average. If we close below that, the next stop will be somewhere between 33.65 and 33.36. So there'll be about another 100 plus points on the S&P. That's going to represent about another 3%. That'll put us into a 5 to 7% decline. We're going to know a lot about this market after the close today. And as I mentioned in opening comments, I believe a lot of folks are going to be a little bit nervous as we come into the long weekend. And depending on how these unemployment numbers come out, this is going to set the tone for the session. And if this 31.21 level holds, we close back above 34.80. That would represent some of the best possibilities. As we look at the market grid for tomorrow, S2 is 34.17. and R1 is 34.72. We're probably going to see an R1 S2 type pattern set up. If we do kick up the volatility like I suggested, we could see an S2 R2 number, which would put us up to 34.92 to 34.17. Based on the pattern, I don't think we'll take out S2, but if we do, you can see the numbers here. They're suggesting we would go down to 33.98 to 33.80. So now that we're in a neutral position on the models, this sets up a broader trading range. I don't think it's a full-out collapse just yet. I'll go through the weekly chart here in a minute. Looks like to me that we're going to see a short-term high, a lot of consolidation, and it will all be based upon the type of action we see in the Apples and the Teslas and all the FANG stocks that have been leaders. We're likely to see those stocks continue to decline and finally start to see some consolidation and some liquidation in those stocks, especially the Teslas and the Apples, which has had this huge increase in supply of stock on the market this week. Before moving on to the weekly chart, I discussed in the opening comments that we did get an RXT trigger. We closed above the RXT yesterday, 35.53. We closed at 35.80. We had a high of 88. We'd see a 2 to 3 day decline. That's still the case for this signal. So we could see a very short pattern. I also mentioned earlier that there should be a 5 to 8 day consolidation. We're going to start to set up a typical ABC type pattern, possibly setting up a more complex situation, and the extreme downward down to around 33.60 to the 33.30 level, just rounding numbers off, is going to be the extreme on the downside. Now, we close under 35.21 today. That's going to set the tone to go down to the 40, and at the 40 there should be a really good trade to come off of that level from a trading viewpoint. But for right now, be very cautious. If you're a WaveTech user, follow the signals and make sure that you don't try to get cute here and play some other kind of scenario out. But the bottom line is this market did signal a short-term top. We're going to see a consolidation, and it's just a matter of whether we hold this 40 period moving average. Now, the numbers on the weekly become a bit more exaggerated, but not a lot. The 10-week moving average is 33.11, with the 10-period moving average rising about 45 handles per week. That will put that average next week at 33.56, which matches with the numbers that I talked about on the downside of 33.60 to the 33.30 level. So we could exceed that a little bit, but it's likely we're going to head to that level. But this will all be predicated on today's close. If it closes under 34.21, then it will definitely be declining to the minimum of those levels. And as the pattern unfolds, I'll continue to follow that. The other thing that we will see on this chart is that the market grid will actually start to angle down a little bit on this close. Unless we were to rally and close back above the 3,500 handle, which doesn't look likely, but certainly anything with this kind of volatility, there could be a complete rebound. Now, folks are still going to be looking at Apple as an opportunity at some point to buy it. I don't know what that price is. There will be bargain hunters on that stock once it gets down a little bit more. So there's going to be plenty of volatility, meaning that the ranges are going to expand, as I talked about, and things will continue to be very erratic for at least 5 to 8 sessions. The S&P futures have traded down to 34.2650, which was a slightly lower low than yesterday. We've rebounded back to 34.43, so we're trading roughly at S1. We traded down almost to S2 overnight, and right now the R1 is 34.82, and then 35.06 is R2. So the futures volatility is much higher, but I would expect that we could see a trade between the S2, R1, and it's possible for an R2, S2 range as well if volatility just gets really crazy, depending on the news that's coming out and what type of volatility that will kick up. The NASDAQ futures are down 1.3% overnight. We're down 157 handles. Reviewing the market grid, so far the low today has been 11,582. S2 is exactly 11,582.25. We're trading 11,638. So we're about 60 handles off the low. So S2 may end up being the low with the NASDAQ overnight. The same as in the S&P, the key number is going to be that 21-period moving average, 11,578. The extreme is likely to be down to that 40. S3 STX is 11,468, 11,364 on S3 and the STX. So this is most likely would be an extreme if we did make a new low, but below the 11,582. The PPMs have completely lost all of their upward momentum, and this sets the tone for a trading range going into the grid that we're looking at, a broad trading range, 12,237 to 11,364. So that's 1,000-point range on this thing. Not going to print that today, but those are the extremes. Most likely, like I said, an S2 is already printed. R1, possibility of trading back to 12,000. This as well also got a sell signal off the open yesterday. So this is important to understand, as all of these short-term trades from an index standpoint, the S&P and the NASDAQ are all neutral from that standpoint. In fact, if I turn the shorts on, there will be a short sale on both of these. So we're definitely going to see these numbers challenged that I'm talking about, the 21-day moving average, the possibility of going down to the 40-day moving average in this pattern. Reviewing the weekly chart on the NASDAQ futures, I discussed last night, I didn't see any major declines happening. I know somehow a lot of folks seem to think that yesterday was a major decline. It was not. Looking at the 10-period moving average, it's at 10,042, but it is jumping about 80 handles. That will move it up toward the 10,200 or so, and that is close to an S2 R3 on a weekly chart. Reviewing the monthly graph on the NASDAQ futures, it's interesting that last month we actually got a close above an RXT signal on the NASDAQ, and we did make a new high so far this month, We got a signal for a 2 to 3 months sideways to down market on the NASDAQ on a monthly basis. So this plays into the scenario I talked about on the database with a 4 to 6 week consolidation, some downside, testing some of these key moving averages into patterns. Like I said, this configuration on a monthly, it's interesting that this signal has come in and that we're going to be in this sideways consolidation range as we come into the election. The final market for tonight will be gold. We are seeing some moderate strength. It will take a close above 1950 today to set a positive tone for next week. We are starting to see ppm 1 to turn around a little bit, but we're still a lot of downward pressure on gold, and especially with the dollar continuing to firm up a little bit, there's not likely to be any big rallies in gold. I mentioned in the live stream yesterday that I was surprised we didn't see some rally in gold based on the sell-off in the equities yesterday. This configuration continues to be the sideways pattern, and there's just no upside. There's still a downtrend in gold, which tells us that we could move towards some of the numbers on the weekly that I've been talking about over the last several days. Weekly 1922 is the 10-week moving average. PPM is at 0.75. Nothing changed since last night because we're basically the same place where we were yesterday. But these PPMs are rolling over. There is some vulnerability to the downside. This 1922 level should hold. We had a low of last week at 1908. That'll probably be also another trigger point below that. If we break through here, then we're going to the bottom of the grid, 1850, which is also toward that 21-week moving average. That'll be for next week. We're likely just to consolidate today, and the possibility if we do get a close over 1950, then we could see a move back toward 1979. But I would be neutral in this market right now. If you wanted to play against this 1927, 1922 number, you could, but I don't think there's any reason to be involved with this market at the moment. This will complete the video. Everyone have a great holiday in the U.S., and we will talk to you on Monday night. Have a great weekend.